Welcome, IGNOU aspirants. If you're getting ready for your exams, you are in exactly the right place. In the next few minutes, we're going to break down Unit 1 on financial markets and get you totally exam ready. Okay, let's dive into this. Here's our game plan. We're going to follow a really clear roadmap, just like your syllabus. We'll cover 6 crucial sections to build your understanding right from the ground up. So, first up, what exactly is this system that powers our entire economy? This isn't some new idea. We're talking over a century ago when economists like Schumpeter argued that a strong financial system is literally the engine of growth. And that view, it's just as crucial today as it was back then. Now, for your exam, you absolutely have to know the 4 core components of the system. So let's move on and see how this whole thing is built. Here's a great way to remember this, a simple mnemonic. Just think IMIS. These are the 4 pillars holding up India's entire financial structure. That's institutions, markets, instruments, and services. First, we have institutions like banks. Now, they don't just move money around. They actually create credit. That's a key distinction you need to remember for your exams. Now, what's really interesting on this slide is the difference between primary and secondary markets. It's simple. One creates new capital for businesses, think IPOs, while the other creates liquidity for investors, like the stock market. And in a similar way, you've got to remember the time horizon. Money markets are all about short-term needs, a year or less. Capital markets, on the other hand, are for the long haul. They're what fuel long-term growth. So with all these different parts, how do they all find a balance? Well, it's a classic economic story of supply and demand. And here's the crucial point. That equilibrium, that sweet spot, happens when the demand for funds perfectly equals the supply of funds. And that balance is what sets the interest rate. So why is this system so vital, especially for a developing nation like India? Let's explore its role in economic development. The source material asks a really powerful question. Why do some economies just seem to struggle to grow? And this right here brilliantly illustrates the reason. It's a vicious circle. When you have low savings, that leads to low investment, which in turn traps the economy in a cycle of slow growth. A sound financial system pretty much acts as a circuit breaker. It mobilizes savings, it funds the best projects, and it reduces risk for everyone involved. It's a total game changer. Now for the data, because we can actually see this flow of money through something called the flow of funds accounts. This table, which is based on the source material, gives us a great snapshot of the economy. You can clearly see households are the net savers, while businesses and the government are the net borrowers. And visually, you can see exactly how the surplus from all the households directly finances the deficits in the business and government sectors. This is the system at work, right in front of you. So the crucial takeaway here is that for the economy as a whole, every single rupee that is saved becomes a rupee that's invested. This is an absolutely fundamental concept. All right, let's pull all of this together and focus on the most important points for your upcoming exam. Here they are, your key takeaways. You need to master these concepts: the components, the differences between the markets, the vicious circle, and who saves versus who borrows. Get these down and you'll be set. And I'll just leave you with a final thought. As you're preparing for your exams, try to think about how this powerful system won't just be a topic you study, but a force that's going to shape your own future.